And welcome to Credit Talk. My name is Todd Stern. I am your host for tonight, and I have a very special guest on tonight, as we mentioned last week, Tracy Campagna, who is a seasoned mortgage broker in the city of Chicago. I've known Tracy for about 16 years now, and she's done a lot of help with the center as far as giving people good advice as far as getting home loans. So this is a live call-in show. So if you have any questions regarding credit or what does it take to get a mortgage, things you need, please give us a call now because the phone lines do fill up. And the number, again, on the bottom there, 312-738-1060. So, again, Tracy, thank you so much for being on the show tonight. And so tell us a little bit about yourself and you're a mortgage broker and how long you've been doing it. And
Sure. I'm a mortgage banker with Guaranteed Rate, and I've been a mortgage banker for 16 years. And, of course, I've worked with you for all of those 16 years. And basically what I do is I help people figure out how to qualify for a mortgage and close smoothly.
Excellent. So I've got a couple questions for you. Now, can anybody get a mortgage?
Todd, anyone that has qualifying credit, income, and assets for the program they're applying for can get a mortgage.
That's good to know. And how much, we get calls at the center all the time. People want to buy a house. The number one dream is to buy a home, own a home. And the question is, how much money do I need to put down on a house? So
that's a good question. It depends on what program you're going for. FHA offers as little as 3.5% down, and a conforming program, there are some new programs out there that offer as little as 5% down. So there's some very low down payment options. We have to also remember there are closing costs associated with purchasing a home, and they range from anywhere from 2 to 3% here in Chicago.
That's good to know because, a lot of people think they need 20, 30% down to buy a house and they might not have it. And we tell people at the center, we talk a little bit about FHA loans as well, but we have an expert on here that can answer, questions about it. Obviously, we talk about credit here all the time. How does credit affect the whole mortgage process?
Excellent question. Credit is very important. The higher your credit score, the better your interest rate will be. So it's important to pay attention to your credit and make sure that you're monitoring it. Of course, that's why I refer my clients to you.
Okay, to the help center. That's excellent. So what is a high credit score as far as getting a loan, and what's a low credit score?
Well, we can find a program from anywhere from ranging from 580 on an FHA loan on a purchase. And then the minimum score for a conforming loan is 620.
That's good. What people ask us too, the credit bureaus out there. Which credit bureau do you use when somebody applies for a loan?
Right.
One do you look at?
We get that question all the time. We use 3 credit bureaus: TransUnion, Equifax, and Experian. We run what's called a tri-merge, and then we'll take the middle score. So we throw away the top score, and we throw away the bottom score, and we take just that middle score for qualifying.
So that's good to know. So if somebody might have I get this all the time, they got a 780, and then their low score could be whatever in the 6s for some crazy reason, but the middle one might be 750. So that's what you run with the 750.
Correct.
So that's why we always talk about why we need to have good high credit scores, because number one thing that people call at the help center about all the time is they want to buy a house. And Tracy, you could probably tell us as well. What if I've got nothing but money in the bank and I want to get a loan, but I got horrible credit? Can you do it?
Well, we would have to work on the credit to get it at least up to the 580 mark for the FHA. Or if for some reason we can't go FHA, then we'd want to at least get it up to the 620 mark.
So it's not like the old days where you could just walk into a bank, as long as you had money, you can get it. Now, which we tell people at the help center is it's all about credit. It's a computer basically saying.
Right, it's layers of risk.
Right. And what did we talk about before? What is a credit report, and why do lenders look at it? Bottom line, to make sure that you can pay this loan back.
Right.
So they want to make that your credit worthiness is there.
See your history of repayment.
Exactly. They don't want to get in a bad situation. So we did talk a little bit about FHA loans. Why don't we do this, Tracy? We have one caller on the line already, so let's take this call and we'll get back into some other type of loans. Hello, caller.
Hi, Todd. Hi, Tracy.
Hi.
I moved to Atlanta about 3 years ago, and what I did was I rented my condominium in Chicago and bought a house here in Atlanta, in the suburban Atlanta. Rates have dropped at least almost about 3 points since when I originally took the mortgage. What do I do to refinance with a renter in the house?
Sure, that's no problem. We would have to start with a full loan application and make sure that you would qualify. But there are programs that would look at your last 2 years of tax returns to see what you've been collecting for rental income and qualify you based on your current income, assets, and then, of course, that rental income.
Okay, well, I appreciate my my scores of around 777, and all payments have been made on time.
That's a very good
Never
credit
been
score.
late.
How long, caller? How long have you been out of the of your rental, or how long have you been renting that unit for?
Almost three. It'll be 3 years the end of the summer.
But so since he's not living in there, this is considered investment property. Are the rules the same for if I'm going to go live in this house versus having an investment property?
Well, the property that you want to refinance is your rental property. Is that correct?
Correct.
Okay, well, we can certainly refinance that as an investment property. So the guidelines are, credit driven, income and asset driven to make sure that you qualify for the loan. But the credit rates interest rates might be a little bit different than an owner occupied place, but we can get it.
Well, if he's at 3 points higher right now, then for
Yeah.
sure you should definitely give us a call.
Rates are very low.
You can give us a call at the help center. Oops, sorry about that. Where our computer is not quite working tonight, so we're going old school here. If you want, give us a call at the help center, and we can get you in touch with with Tracy. Well, thank you so much, caller. So let me ask you a question though. Now, so he's got a renter in there. Does he have to give you the lease and stuff like that? Do you require
we
that?
need a copy of the lease and his tax returns for the last 2 years.
Okay, not the renter's tax returns,
No,
right? Okay.
the borrowers.
Let's go to our next call. Hello, caller.
Yes, well, I have a question. I did a short sale about 4 years ago, and I'm interested in possibly going back into and purchasing a home. Do I qualify, or how many years would it take before I qualify to be a first-time buyer? I've heard of programs like that.
Well, there are some programs that will allow you to be a first-time buyer after 3 years of not owning a property. But the short sale is something that we would want to look into and get a little bit more information on before I could tell you exactly if you qualify for the loan or not. We would really need to call through the help center and take more information so I can make sure that we have everything in line. But there are options.
So, caller, are you renting right now, I would imagine?
Yes.
But how many years do you have to be out of a short sale? If somebody did a short sale 6 months ago, can they buy a house?
Not right now. It would take at least 4 years.
It's 4 years? Wow.
Yeah, there are different lenders that offer. FHA has a different guideline, and conforming have different guidelines. But I would really need to talk a little bit more in depth and see where his credit is and where we've recovered from, and what we can do going forward.
Do you know what your score is, caller?
No, not off the top of my head.
Okay.
Right.
Well, if you want, give us a call again at the help center, and we can point you in the right direction and see possibly what your score is and get you in touch with the right people, and hopefully you can purchase another house. You will be able to purchase another house eventually, but thank you so much. Let's go to our next caller. Hello, caller.
Hi, how are you? I was just wondering, what is the soonest I can reapply for a mortgage after I file for bankruptcy? And I'll hang up and let you answer the phone call. Thanks.
Okay. Well, each lender has different guidelines. So there's different guidelines for FHA, for VA, and for conforming loans. Right now we're looking at, and I'm not sure what kind of bankruptcy you've had, Chapter 13 or 7, but in most cases it's anywhere from 4 to 7 years.
Okay, so just for our viewers out there, Tracy just mentioned 2 different types of bankruptcies, a Chapter 7 and a Chapter 13. So the difference is a Chapter 13 is a repayment of debt, court order repayment of debt. So let's just say you owe $50,000. They base it on your income, what your debt is, and they come up with a program where you can repay your creditors. You won't pay them the full amount. It will be basically a really discounted amount, but you will pay them back. And sometimes you have to do a 13 depending if you have a lot of assets. If somebody's sitting with hundreds of thousands of dollars in the bank, they're not going to let you file a Chapter 7, which is just a total dismissal and wiping out all the debt if you have money in the bank. So if you do have money in the bank, they are going to want you to do a 13 and repay the debt. And just so you know, bankruptcies do remain on a credit report for 10 years. Negative information such as charge-offs, collections, late pays, items like that stand for 7. So we get a lot of calls, at the center, then people say, well, my attorney said that the bankruptcy should fall off, but it's still on. And I said, well, when did you file it? It's been 7 years. And I said, no, it's 10 years, and their chin drops. So, but it is 10 years on that. So those are some excellent questions. So as we, before the calls came in, just want to, if you just tuned in, this is Credit Talk. My name is Todd, and this is Tracy, who is a licensed mortgage broker. If you have any questions regarding on how to get a loan and how to get credit or what you need to do to fix your credit, please give us a call right now at the number below, 312-738-1060, and you can ask your questions. So we're talking a little bit about loans, and you touched base about FHA loans a minute ago. What other types of loans are there? I hear, conventional, jumbo, ARMs,
Sure.
fixed. What are we looking at here?
Sure. Well, an FHA loan is a Federal Housing Administration loan, and that's a great product for someone who's looking to put anywhere from 3.5% down and might have a credit score of 580 or above, and maybe a little bit of a higher debt-to-income ratio. So it has a little bit of a broader guideline that's easier to fit into. Conforming loans, they do start at low down payments, such as around 3%. There's some products out there. Jumbo loans are any loan over 417 here in Chicago.
417,000.
417,000.
Right, okay.
Sorry about that. 417,000. But we have lots of products available and new products coming out all the time. But if anyone's interested in taking a look at what they would qualify for, they could call the help center and get in touch with me, and I can see what I can do.
And people will ask us at the center all the time about loans, and the big question too, which I'm sure you ask your clients, is how many years are you going to stay in this condominium?
Right.
How many and for an ARM, now I've had some ARMs myself, because I knew I wasn't going to be there for the rest of my life.
Correct.
So I took a 3-year ARM or a 5-year ARM, and the beauty is, as you know, lower interest rate, and that made a big difference on one of these properties. This was years ago, and the difference between a 30-year and a 3-year ARM was like $600-700 difference. And I knew I wasn't going to be staying there forever, so I went with the ARM, and it worked out perfect.
Sure.
So
ARMs are adjustable mortgage rates, and they're locked in for a specific amount of time. So if you're talking about a 7-year ARM, it's locked in for 7 years and amortized over 30. And after that 7-year initial lock-in phase, it could adjust. So it just depends on how long you plan on staying in the property or what you want to use the property for.
it's good to know. Now, I've been at a lot of first-time home buying seminars, and people want to buy homes, and everybody wants to be an investor. They want to get involved,
Right.
which is good, but you got to be very smart about it to do it right, because being a landlord is not the easiest thing. Which we've heard a lot of landlords at the center calling us, but we don't want to talk about those problems right now. But so tell our viewers out there, you have I know there's 4 units, a 6-unit. What's the
Sure.
difference between a 4-unit and a 6-unit building?
Okay, well, a 4-unit building, 1 to 4 units would be a residential purchase or refinance, but anything over 4 units is a commercial loan. So that's a whole different loan.
Okay, we got another caller, so let's go to our caller. Hello, caller.
Hi, how are you?
Hi.
Question about Chapter 13 and mortgage again. What other types of products are available? What other type of mortgage besides traditional mortgages? Could I maybe work with a motivated seller, that kind of thing, to secure some kind of financing that doesn't have to be reported and all that stuff? What other options would I have if I'm working with a Chapter 13 to get back in the real estate game?
Well,
Thanks, I'll get off on the chance.
Okay, thank you. If you're currently in a Chapter 13, correct me if I'm wrong, but I don't think you can get a mortgage. Is that correct, or can you?
Well, there might be some private portfolio lenders that would take a look at it, but that wouldn't be a loan that would conform to Fannie or Freddie, which is an underwriting guideline for 99% of loans. So I would really need to take a look at the scenario, see how long he's been in the Chapter 13 or when it's going to be dismissed to answer that question. But if he's currently filing Chapter 13, the options are limited.
So you mentioned private portfolio. That sounds exciting. What's that all about?
Well, those would be lenders that don't underwrite according to Fannie or Freddie guidelines. Maybe they would take a look at their own guidelines. And of course, those interest rates would be higher and down payment would be as well higher.
Okay. Well, that's good to know. So there is options out there in case you are in a Chapter 13. And again, we talk to people all the time at the center. There's certain reasons that you just have to file a bankruptcy, and it's not bad or anything. We've advised people sometimes, seek out a bankruptcy attorney because you've got 10 credit cards, you're paying your minimum payment every month. You're never going to get out of this. It's going to take you so many years to get caught up, and you're struggling every week or every month. So sometimes the bankruptcy is the way to go. So back to our 4-unit and 6-unit. So if I want a 6-unit, can I get a residential loan on that as well?
You cannot. That's a commercial loan.
It's a commercial loan, okay. And
commercial loans usually require a little bit more down and a higher interest rate.
Okay. Would you advise, somebody that's, you see this all the time, you work with a lot of realtors and buyers, if somebody's never been in the game before, they want to get involved, do you think they should buy a 12-unit building or start out with maybe a 3-unit building or 4-unit building? What would you suggest?
Well, I would suggest speaking with me first so that I can see where your income and assets are and what your goals are for buying an investment property, and then possibly looking at what the rental income would be and what we could use back. But starting in the residential area of 1 to 4 units might be a little bit easier to qualify for than a commercial loan right off the bat.
I would agree with that. Start out with the 4-unit because right there you're going to be in a residential type of loan versus the commercial loan, which you got to, like you say, jump through a lot more hoops.
Put a little bit more money down and higher interest rates.
And my advice to people out there that do want to buy and get involved with it, you got to get involved. Don't think you can just buy these buildings and sit back and it's on Easy Street.
Oh, no.
You have to be there. You got to make sure that your tenants are paying you. You got maintenance. And whatever money you bring in, and if there's extra cash flow, set some aside because you're going to have maintenance issues. Mm-hmm. Now, I actually know it's actually a friend of mine that has some buildings, and he has bought actually home warranties on these units, and they may cost anywhere from $500 to $600 per unit per year, but boy, they've really paid off. He told me the other day he had in one of his units, he had a Sub-Zero refrigerator, which is obviously a very expensive refrigerator, and the motor went out, and it was like $1,500.
Right.
So, and out of his pocket was $75. So, it's an insurance policy just in case something breaks in these homes. I personally own them on my property and had them forever, and I highly recommend them. That way, the worst case is it's going to cost me $600 a year plus a deductible. So, okay, so that's good to know. What about, we get this all the time as well. I get the call, they want to buy a house. They got all this money sitting in a shoebox, from their tips. It's under the counter, whatever they want to call it. So they come to you and they say, Tracy, I got $50,000 down payment. It's all in cash. Can we use that money to buy the house? We can get a mortgage.
The answer is no. You cannot use cash to buy a house or for the down payment. We actually need funds for your down payment and for your closing costs to be sourced. So we're going to need that money in a bank account or a savings or a 401k, and we're going to need at least 2-month statements to prove that that's your money.
So, okay, and we've heard about gifting, say if I'm short on the money, my parents can give me money. What if they give it to me, you're saying 2 months, but what if they give me this money tomorrow and I got to, and then it shows up on the bank statements? Is that too soon, though, or what happens there?
Well, if your parents are gifting you money from an account, from a savings account or checking account, we can absolutely use that right away. But if they're going to give you just cash, then we would have to at least let that money be in an account for at least 2 months before we could take a look at it.
That's good. Let's go to our next caller. Hello, caller.
Hey now, what's going on?
Good.
Question. I filed a Chapter 7 a little over a year ago. When would it be okay to go and try to purchase a house without the banks giving me a hard time?
Well, it depends on which kind of program we're going to use. The FHA or in a conventional loan have different guidelines. So anywhere from 4 to 7 years. And I'd really need to see where your credit has recovered as well from that Chapter 7 bankruptcy.
Caller, have
So,
you?
correct me if I'm wrong, if the bankruptcy is at least 4 years old and it's still on my credit report, then I might be able to qualify for a home regardless if it's a conventional loan or unconventional.
You might be able to. We need to take a look at it.
Have you established any new credit since the bankruptcy?
No, I was told to maybe, I actually listening to this show a couple weeks ago, actually I went out and got some secured credit cards, and that
Excellent.
seems to be
That's
helping
good
my credit already. So thank you for that tip.
Good, good. No, that's what we tell all our callers out there. Thank you so much for the call, caller.
Thank you.
So we've talked about this before. Say people that do file bankruptcy, go out right away, and get a secured credit card. The major banks offer them. It's basically where you're going to put in a deposit. Say you put $500 in, they're going to give you a major credit card with that credit limit. But bottom line is that it's going to show up on your credit report. Speaking of, how many open good trade lines does a buyer need to have on his credit report? Does he have to have open trade?
We need to have at least 3 trade lines that are in good standing for the credit report to show some type of credit back.
And what about what if I've been in a rental for the last 5 years? Does that work? Can I show you, rental payments or anything? I've heard of that before. Does that?
We can take a look at your rental payments, and we can possibly even take a look at your credit through the Help Center and see what we can do to help build that credit report up as well.
Okay, good. So we get another call. I'm sorry, I know these things, but the guy calls me and he says he's trying to buy a house. He makes $100,000 a year, but he doesn't like to pay taxes, so he's
Right.
only showing $20,000 on his tax returns. Well,
Right.
I don't think any of us like to pay taxes, but unfortunately, it's one of those things. So what do you do? What happens like this? Self-employed
Sure.
guy, but he's only showing 20. He's writing everything off.
Right. Well, this happens all the time. With self-employed borrowers, we actually need to qualify you on your net income. So after all of your deductions, that's the number that we would use. So if you make $100,000 and you're writing off 80, you're going to only claim 20,000. We would only be able to qualify you on the $20,000.
And that's one problem that I hear all the time, again, about people with taxes. It's a catch-22. You want to buy a house, you have to have the return that shows the money that you've made.
Absolutely.
If not, you're not going to be able to purchase that house. So it's important that you file your tax returns to the best of your ability if you're looking to buy a house. And another reason, if you don't report them, you don't want to knock on your door from Mr. IRS either.
Right.
So that wouldn't be good. We only have a couple more minutes here, but how long does the home, if I call you today and say I want to get a mortgage going, I found a house,
Sure.
How long is that going to take?
It takes anywhere from 30 to 45 days in today's market.
Well, that's pretty good, because
Yeah,
I know
pretty
that
quick.
I've heard a lot of them taking a lot longer. So,
Right.
if you're, I guess, whoever, your company that you're working with, make sure it's a big company, they have a good processing department, and they
Right.
can get the job done in time. So I've got time for about one more question here. I've heard this at the Help Center before. They want to buy a house. This call was the other day. The purchase price was $300,000. The appraisal came in at $250,000. They called us saying, "Well, what should we do?" Real quickly, what would you suggest?
Sure. What you can do is you can go back and renegotiate with the seller to see if they're willing to lower the purchase price, or you could bring the additional funds in if you're willing to buy that home even though it didn't appraise for the amount that you were purchasing it. And if not, then you have the choice to walk away as well.
Right. And what I would say, yes, definitely. There's a reason why that appraisal is coming in lower.
Right.
The property's not worth it. So why would you want to even bring extra money to the table? And now you're going to be upside down in that house, because when you go to sell it, you're going to be underwater and lose money on it. So let me just flash up our Help Center number one more time. Sorry about that. If you have any questions and you weren't able to get in, I know there's a couple calls that didn't get in, please give us a call, leave a message. We'll be more than happy to get back to you. I want to thank Tracy so much for being our guest
Thanks for
tonight on
having
the
me.
show. Yes, we'd love to have you back.
Excellent.
Stay tuned for Veterans Affairs. That's the next show. Great show. We will be back next Thursday at 6 p.m. Have a great weekend, and thank you.